Hey, it's Paul from Remax Hallmark, just reaching out today with a Christmas 2023 update on the real estate market in the GTA. You hope you like my very aptly seasonal sweater. So I'll come closer now to kind of read some of my notes and kind of give you an update on where things were, where things are going. And hopefully you get some value out of it as you kind of wrap up this year. So if you look at what's happened in the GTA real estate market from the peaks of April 2022 to the imminent depths of December, January 2023, and then the resurgence in the spring market, and then since then the market's kind of been dropping and it's continued sort of its downward slide till very recently, till maybe now. So this update is very apt. Up to the point update, because what we're beginning to see now are some changes. So the spike that we saw in the spring market was because the Bank of Canada stopped or gave indications that they're going to not raise rates, the prime rates anymore, and that kind of built the momentum for a lot of buyers who were sitting on the fence to jump back onto the market. And then there were back-to-back interest rate hikes that dampened the spirits, and then of course the market's been falling since. Now, till very recently, when last week the US Fed came out and said they're going to potentially cut the rates next year. So again, I'm going to come to that in a second, but essentially the reason for the slide for us all this time, for the most part of the year, has been because people are worried about their jobs, people are worried about a recession, and that's exactly the point of the Bank of Canada doing what they were doing. They were raising rates to an extent where there's going to be unemployment, and then people begin to pull back on their spending. So in a way, Bank of Canada has attained what they set out to be, where they've kind of instilled some fear in the market, and now people are finally beginning to pull back, even though I'm not sure what's going to happen with this year's Christmas sales. We'll see what the data comes out in January. We'll see. But regardless, the second factor was that interest rates being so high, people were not qualifying for any significant amount of mortgages, and even if they were qualifying for these mortgages, it was really those monthly amounts were really heavy. So people basically pulled back, buyers essentially pulled back, and they're just waiting on the sidelines to make these decisions. Now, mind you, and one thing is very clear, that there's a ton of intent on the market. There's people who want to transact real estate. Sellers want to sell, buyers want to buy. It's just that we're in a bit of a lull, that the current market that we're in. But I think that's about to change. And so we can sort of start talking about the interest rates for a second, because that's going to play a big role in where the market goes. So over the last about 8 weeks or so, fixed rates have been dropping. And these things don't really make the headlines that often. People fixate on the Bank of Canada's decision. And yes, a lot of people were on variable rates, so I totally get it. When the variable rates went up, a lot of people were in a lot of hurt, and they're still hurting. But fixed rates have been coming down for the last 8 weeks, and they are anticipated to sort of slide down even further into February, March, where we begin to see potentially, again, I hate predicting, but potentially we could be looking at 5-year fixed mortgages in the mid to high 4%. So that's coming, that's happening, that's already underway, and that's again based on some of the news that came out of the US, not so much so the Canadian economic news, but the US announcement. So essentially the whole idea, the whole reason why this market slowed down was A, interest rates, and B, consumer confidence. And now with the interest rates sliding down, that's a part of the puzzle being solved by itself. So as the interest rates come down, the people's pre-approvals will go up, people's qualifications will go up, and they'll begin to enter the market again. So it'll be interesting to see where the rates go, but we anticipate that the fixed rates will be dropping in the next 6 to 8 weeks. And we'll see where they land. But of course, people who know much better than I do, they anticipate that the 5-year fixed rates might be in the mid to high 4% come late Feb, early March, if things stay on course. Of course, there's so much that can change between now and then. where things are headed is largely dependent on, interest rates and economic activity. So with us, the inflation seems to be really sticky, and banks are keeping a close eye on it. Bank of Canada is keeping a close eye on it. But in the US, the Fed made a decision that they're going to cut rates next year 3 times or more. So that's going to put pressure on the Bank of Canada to cut some rates here as well. That should encourage some more economic activity. That should encourage some more people to be a little more confident about their buying decisions. So we'll see. The other thing, of course, we must address is the immigration levels. So if there's going to be this constant demand of people coming into the country, in the last I think Q3, we added 400,000 people. If there's going to be that level of demand being created for housing, there is no way this market stays stagnant for a long time. Eventually, when there is a pullback, when there is sort of affordability that comes into the market, this market should rebound fairly quickly. Again, too many factors for that, so I can't really tell you exactly when or how much. But basic fact is that the immigration levels are so high that there's this constant demand of houses, and that's eventually going to show up. Moving forward, we anticipate that my earlier sort of predictions, and I hate to sort of throw that word out there because obviously there's so much that can change. I had anticipated that the real estate market in the GTA will sort of hit a low maybe March, sort of April, May, and then sort of begin its upward journey from that point onwards. But if these interest rate cuts in the US happen in the first half of the year, then that might encourage a lot of buyers to come out sooner than later. So that might move up, and we might see a busy late part of the spring and early summer. Originally, the expectation, the anticipation, again, based on a lot of people that know a lot more than I do, head of Remax, head of Royal LePage, their anticipation was that we're going to have a pretty stellar Q3 and Q4, because by then interest rates would have come down, people would be in the mood to buy, the economic activity would have come back in. So, July onwards, we would have a lot of activity in the market, but we'll see. We'll see how things go, but that's at least what's anticipated for now. The opportunity that exists amidst all of this, you have to understand, is that the current lull that we're having in the market, this will not sustain. I don't think this can sustain for any period of time. So it's a great time. Again, I sound like a broken record, but it's a great time for people who've been sitting on the sidelines to kind of jump back in, because some of the deals that you can have now, those won't exist 6 months from now. And again, that's simply because of the interest rates falling and the immigration levels where they are. So there's a lot of demand. The interest rates are going to fall quite likely, and that will basically spur that activity again. So if you've been on the sidelines, or if you know someone who's been on the sidelines, it is a good time to sort of start having that conversation to kind of get back into the market. So that's an opportunity that exists in the resale side of things. If you're a seller and you want to sell, you could use this information to kind of project your move. So for instance, if you are looking to sort of sell and buy, then we should sort of start talking and strategizing, because even though what I'm telling you is very general, each community is sort of different. So for instance, market in Brampton, very different than market in Ajax, very different than market in Metro Toronto, right? So it's completely divergent, but having a broad sense of what's happening can sort of give you some guidance, and then of course we should chat if you're looking to sell and buy, or sell or buy. The amazing opportunity that today exists are in the pre-construction realm. The assignment market is just flooded with a lot of speculators who are trying to dump their investments, freehold homes, freehold townhouses, condos. These are investors that bid off more than what they could chew, and now they're essentially having to sort of offload these at a massive discount. In some cases, investors are walking away. I shouldn't call them investors, actually, the speculators. Speculators are sort of walking away from their deposits even, and they're sort of just giving these up because they can't close these purchases. So, and there is a difference between a speculator and an investor. The way I like to look at it is, in the stock market, if you're going to be sitting in day trading, and if you don't have the right protection in place, you will get burnt. And that's what happened to these speculators. That's whom I would compare these people to day traders, people who were speculating. They were buying 2, 3, 4, 5 different pre-construction things, with no intention of closing on any one of them. They were hoping to assign and flip and get out of it, make a quick buck. Well, now you're caught, and these people are going to be in a lot of trouble. But folks who were sort of buying with a longer term horizon of 6, 7, 8, 10 years, they will do just fine. Again, if you look at 25 years, the Toronto Real Estate Board data, the Toronto real estate market has gone up 7 to 8% a year, even though that's high, but that's sustainable. And again, with the immigration levels that we have, with the supply levels that we have, it's sustainable, and people who are in it for the long haul will do just fine. The speculators, not so much. And that's the other important thing that I want to highlight, is that the supply levels, you've seen the government, all levels of government, from the federal government to the provincial to the municipal governments, all jumping in and saying they want to do something about the housing. Now, being me, I think this is all because of the losing popularity at the federal level. I think that's where they sort of got very interested in housing all of a sudden, when it became an election issue, when it became an issue that people were very upset about. So regardless, stuff is being done, the policies are being put in place, and there's good amount of traction on the from the government of all levels to try and solve this problem. But this should have been done 10 years ago, right? The steps that are being taken right now, they should have been done before they decided to import 2 million people, 3 million people, right? Like this should have been put in place 10 years ago to sort of make sure we're not in this deep a hole that we're in right now. And we are in a deep hole. And what I mean by that is the number of houses that are being built, the number of condos that are being built are not close to the number of people that are coming in, the demand. So, in the short term, we're going to be in this very, very tumultuous phase where buying, people who are looking to buy, for buyers, it's going to be extremely difficult. Once we're past the current phase of the market we're in, it's going to be very difficult again for buyers to get in. And also, you got to remember, the supply side is suffering. So for instance, because of the high interest rates and because of everything that's gone on in the market, builders have not been building. So guess what's going to happen? In about 2, 3, 4 years, when all this supply dries up, there's no more supply coming down the pipe, right? So what happens to prices then? There's all these immigrants, all the new household formation in Canada, kids who've been born here and kids who want to buy. When they want to buy and there's no houses coming down the pipe, guess what that does to the market? It again creates this artificial bubble, which we all hate to see. You, me, even as a professional, I hate that when the market goes out of whack, when the dynamics don't match up. So it's going to be interesting as to what happens, but 2024 is going to present great opportunities. I think in the first part of the year, first 3 to 4 to 5 months, I think there's going to be really good buying opportunities. I think after that, the market will just kind of turn and sort of start its upwards journey. And who knows how quickly that will go up? Will it be the case like 2021, 2022, or will it be more sustained growth? Who knows? I wish I could tell you, I wish I had a crystal ball, but if I had a crystal ball, I wouldn't be sending you this video on Christmas Day, working away, but I'd be on a beach somewhere. So anyway, I just want to wish you a Merry Christmas to all those celebrate and a fantastic 2024. And if you need to get a hold of me, you know where to find me, and I look forward to helping you and the families. Take care. Bye-bye.